Hello, everyone, and welcome back. I am so happy to welcome David Terk back for this episode. David is an expert in special needs planning. He always knew he wanted to do work that would result in changing people's lives for the better, and special needs planning certainly fit that description. David enjoys the challenge of helping people maximize and protect the benefits they are entitled to, and is passionate about helping families create a secure future for all their loved ones. He is a highly sought-after speaker on the many subjects and issues that affect the special needs community and provides comprehensive planning services through his firm, Serenitas Special Needs Planning. He holds a BA from Tulane University and an MBA from Pepperdine University. David, welcome back. I am so happy to have you and your great wisdom and expertise back.
Thank you, Gilda.
So today we are going to talk about government benefits and programs, what they are, how to qualify, how to access them. And you and I have discussed this personally before, and you said the best place and the most natural place to start is talking about Social Security, specifically SSI, and how that relates to Medi-Cal, SSA benefits, SSDI, what they are, how they progress, and what the differences are. So I will throw the floor over to you and ask you to begin with that.
All right. Well, perfect. So as we had discussed in a number of our other segments as it relates to special needs planning and creating special needs trusts, and what is the purpose of going through all of these motions. And the common thread throughout all of this is the protection of government benefits. Why are government benefits so important? A lot of people don't realize we're talking very long term here. So from the ages of 18 to 80, government cash benefits will exceed $1 million of cash benefits. And that is before you even consider the value of lifetime health care through Medicare and Medi-Cal, or the Medicaid program.
That's a good
right?
Money, yeah.
It adds up, and it is truly significant and makes an enormous difference in everyone's life, in the care for children, the care for the family, and how much a family has to devote to resources. So the goal is to be able to maximize everything that we are entitled to and preserve those benefits. Mm-hmm. There are 3 cash benefits that we need to be aware of and 2 healthcare benefits. So I'll mention them first, and then we'll go through defining each of those programs and how they interact together, and so on. So the first is called SSI, which stands for Supplemental Security Income. Second is SSA, which actually stands for nothing, but it represents Survivor Retirement Benefits. These are government acronyms that don't actually match up to the words, but that's how it is.
Okay.
Finally, we have SSDI, which is disability income. So we'll start, and then the lifetime health care benefits, as I mentioned before, are Medi-Cal or the Medicaid program and Medicare. Mm-hmm. So the first benefit that your loved one is typically going to be eligible to receive is going to be SSI, Supplemental Security Income. This is designed to be a temporary benefit. The current maximum amount in California is $910.72. Every state is different. There is a federal contribution of $734, and then each state determines whether they are going to subsidize an additional portion. Mm-hmm. California happens to be the highest in the nation, and again, that is $910.72 a month.
Oh, wow. I didn't know that California was the highest. Okay.
Well, we also spend a lot, too. So it's not like dollar for dollar is equal, but at least there is some acknowledgement that California is expensive. Okay, where are we? We are at
SSI.
SSI, perfect. So this benefit will typically start at age 18. It is based on the child's income And the eligibility requirements are as follows. The benefit, the child has fewer than $2,000 of assets in their name. This is really where things get bollocksed up, is at that $2,000 threshold. Mm-hmm. If employed, they are earning less than $1,170 a month. Those are 2018 numbers. And employment income over $85 a month results in a reduction of $1 of benefits for every $2 earned. I like to use an easy example because the government puts all these crazy things in there. If your child earns $585 in a month, the first $85 is a wash, and then the benefit would be reduced $1 for every $2. That would be half of $500. The benefit would be reduced $250. Net, though, when you do the math, you end up making more by working. So there is still an encouragement to work. A lot of families get concerned that their benefits are going to be impacted and that they are discouraged from working, and that isn't the case here. Also, the disability has to have a prognosis of at least 12 months, generally not an issue with the population we're talking about. Mm-hmm. And so those are the main things to be aware of. There are a number of reasons that families may receive less than the maximum benefit. And I know we had discussed this on a previous podcast, but this is what relates to the confirmation letter for rent. Mm-hmm. So many of the reasons could be for a benefit to be reduced is that a child is receiving child support or an adoption subsidy or other Social Security cash benefits, or they're employed, as we just mentioned. Mm-hmm. What happens very frequently, particularly with children living at home, is that they are not paying rent. When the parents are interviewed by Social Security, they're asked, oh, well, what are you doing with your child? And you say, oh, well, they live at home with us. And, oh, are they paying rent? Well, no, we're good parents. We take care of our child. Why would we charge them rent? Mm-hmm. And you know where we're going. Social Security says, yes, oh, you are the most wonderful parents in the world. Thank you so much. For that, we're going to reduce your benefit by a third. Mm-hmm. Without going into all the details, there is a letter called the confirmation letter for rent, which can be used to identify that the child is able to pay rent through the benefits that are being provided. That is part of the room and board. Mm-hmm. And being able to maximize that benefit rather than having a reduced benefit.
Right. We went into that in detail in another one of your podcasts.
We did, and so anyone listening to this, I would refer to the details on that, or feel free to touch base.
Right, absolutely.
So we've now talked about, go ahead, Gilda.
I was just going to say, so we've talked about some of the basics of SSI, and then I believe you said that, well, of course, I think you probably have a few more things to add on that, but I believe you also mentioned that anyone who receives any SSI would also automatically qualify for Medicaid or in California, Medi-Cal.
Exactly. So anyone receiving $1 of SSI benefits is automatically enrolled in Medi-Cal. Okay? Mm-hmm. Also, as it relates to Medi-Cal, you do not necessarily have to be on SSI to be receiving Medi-Cal, but it is automatic when you are on SSI. Mm-hmm. Now, I mentioned earlier that SSI is a temporary benefit. When one of three things happens to the parent under whom the child's collecting.
By the way, before we go to that, just one quick question.
Yeah. Oh, please.
To apply for the SSI, people can do it online? Do they have to go down to the Social Security Administration? You know, if this is, in other words, if this is their first time applying for it for their child, how would they do that?
You can do it online or create the paperwork and fax it in. It is always my recommendation to go in for a personal interview. They will offer to call and do a phone interview. I always recommend doing it in person. You get a much better feel for who you're talking about, mm-hmm. Your child, and what they're able to do, and you can present in person rather than over the phone where it's frankly, just a lot easier to say no.
Mm-hmm. Mm-hmm. Makes sense.
It's my goal that families are able to get this done right the first time. There are many ways that things get delayed and messed up. To do it right the first time it's helpful and a helpful relief to families.
Of course. Okay, so you were saying once three things happen, the SSI can transform to another benefit.
Yes. So when a parent retires or becomes disabled, the child will migrate from SSI to SSA, the Parent Survivor Retirement Benefits. Mm-hmm. So during that time, when the parent's either retired or disabled, the child is eligible for 50% of the parent's full retirement age benefit. So let's say the parent's benefit is $2,000. Your child's going to receive $1,000 a month, mm-hmm. as well as after 25 months on that benefit, become eligible for Medicare, mm-hmm. which is huge. So now you can have two levels of insurance without even talking about private insurance. You can have Medicare as primary and Medi-Cal as supplementary, the payer of last resort.
Mm-hmm. Mm-hmm. And plus the survivor benefit, which is higher than typically speaking, it's
yes.
higher than the SSI, and I believe, and that's if the parent retires or becomes disabled. If the parent actually passes, I believe that amount goes up even more. Correct?
It does. Correct. So when that parent passes, the benefit then goes up to 75% for life. So using the same example of $2,000, mm-hmm. 50% when the parent was retired is $1,000. The parent passes away, that goes up to $1,500 for life. And this is really important to know before it happens because it allows us to plan accordingly. The more we know, the better we're able to plan and ensure that our child is going to have the life we want them to have. The state is not going to provide everything, and by planning, this is an acknowledgement that we want them to have a quality of life that the state is not necessarily going to provide. Right.
Now, as a parent, my question would then be, whereas you were talking about SSI being income-based, in other words, it's what we call means-tested. Mm-hmm. The SSA that you're talking about, based on the parent's retirement, disability, or death, is not means tested. Is that correct? And if it isn't, is there anything that can adversely affect it?
So yes, you are correct that SSI was means tested, and you're not able to have more than $2,000 of assets, which is, mm-hmm. as we know, there are different ways to manage those issues. Mm-hmm. SSA does not have a means test, but we do need to be aware, while benefits are not going to be impacted by your income, mm-hmm. if you have received Medi-Cal or Medicaid benefits over time, if you do have assets over $2,000, Medicaid can ask for payment for past services rendered. So there are two issues that need to be considered when it comes to that planning. It's both the Medi-Cal payback as well as how the cash benefits are impacted. With that said, the survivor retirement benefits, when the parent passes, 75%, you're on Medi-Cal. Oh, I was going to health insurance with this. Mm-hmm. Many families don't realize that their child is able to maintain their own private insurance through the parent. For as long as the parent has that insurance, the child does not need to be removed at age 26. So years ago when we had the Affordable Care Act, there's a lot of talk about raising the age of a child on a health care plan to 26. What went missed by many families is that this doesn't affect a disabled child. There were already laws in place to allow the continuation of coverage under a parent for life as long as the parent has that. This is very important as it relates to, one, the military benefits, government pension benefits. A lot of government pensions provide lifetime options for care, which can be passed on to your disabled child. And if they're able to stay on for life, you can have private insurance as your primary, Medicare secondary, and Medi-Cal as a third level of insurance.
Okay. Now, you said something that was, I'd like you to elaborate on just a little bit with regard to, again, the SSA benefit being affected by a Medicaid, Medi-Cal payback clause in addition to having the cash benefit potentially affected by certain things. Obviously, if someone is using Medicaid or Medi-Cal, that amount can add up very quickly. And for Medicaid to be able to come and say, well, now pay us back is a huge thing and could really have a severe impact. So how is something like that avoided and or managed in addition to protecting those survivor benefits, the cash part of it?
Well, perfect. There are a couple different ways to address that problem, and it depends on how big that problem is. So, for instance, a problem, and I say problem, these are good problems to have. Having money is a good problem. We just need to know where to put it so that we can use it. So these good problems that we have, if it is an under $15,000 problem, there is a new program called an ABLE account.
Okay.
It is a savings program that a person with a disability is now allowed to have, where the assets are not considered a countable resource and will not impact their government benefit eligibility. So now you have an easy account that you can use as a relief valve. And if the child's assets start accruing over $2,000 and under 15, then you can put these assets into an ABLE account in any state that accepts them, and they're protected. And you're able to maintain your benefits, have supplementary income or cash in this case, but it is supplementary to the benefits that are being received. So that addresses a smaller problem, the under $15,000 problem. If we have
under $15,000, that's per year, correct?
Yes, for an ABLE account, you're able to put in up to $15,000 a year as a gift. To further complicate things, if the child is working and earning an income, they can put in up to an additional $12,000 of their own money.
Okay.
But gifts are limited to $15,000 per year. They are after-tax dollars that go in. They grow tax-deferred, and when used for qualified disability expenses, they are tax-free.
Okay, very good.
Very useful way to save. It is another tool under the umbrella of comprehensive special needs planning, which allows us to solve some of these vexing issues as it relates to benefits. So what if we have a larger problem, such as a $30,000 problem? Well, there is also something called an expense letter for reimbursement. So let's say your child receives $30,000. Maybe it was a settlement, maybe it's back pay from Social Security, whatever the reason, money came directly to them. Again, a good problem. Well, mom and dad are able to create a letter, this expense letter for reimbursement, which states how much money the child has, and then be able to go back 15 months in time and itemize reimbursable expenses that the parents have paid for the care of their child. If in that 15-month look-back period, the funds are not exhausted. You can project forward another 15 months for a total of 30 months of reimbursable expenses. And by doing that, it is I use 30 as an example because it's very easy to justify $1,000 a month for care. Mm-hmm. That it's not a hard and fast number. They just need to be justifiable expenses. By doing that, you're now getting the money out of your child's name into your name, and it will no longer affect their benefit eligibility.
But can we have tax consequences on mom and dad?
No, because that's a reimbursement.
Okay, so
for expenses. Yes, so it's not considered income. Mm-hmm. It is reimbursement.
Okay.
Okay. Mm-hmm. So very an important distinction.
Yes.
So that handles two of the problems. That handles a smaller up to $15,000 problem. And now the expense letter for reimbursement can handle up to $30,000-ish if you have the expenses to justify. But what happens if you have something bigger? You have a $100,000 problem.
A larger inheritance, or perhaps the child inherited some money and they're working, some combination of factors.
I'd say the most common instance of this is a grandparent, a well-meaning grandparent who leaves money to their grandchildren, and without the parents knowing. The parents may have been proactive in creating a special needs trust where money could be left to the child without it affecting them, but things happen.
Right.
And so a way to address this good problem, well, first of all, we have $100,000. What do families often do? Oh, no, I'm going to call Social Security. And Social Security will give you an answer. It just may not be the best answer for you.
Right.
An answer that they give is often, oh, well, just spend it. Well, that's okay if you're talking a couple $1,000s, but $100,000, it becomes ludicrous, and
right.
There's a better way to put these funds to use for a child's benefit. So when you have these good, larger problems, there is another type of special needs trust, which is called a disability trust. And that is a first-person trust, meaning that it's the beneficiaries themselves, and they're able to put their money into this type of trust where it is preserved for them until they pass away. And the caveat is when they pass away, anything remaining in that trust will go back to Medi-Cal or Medicaid first before going to anyone else that you've identified. But it is a pretty good deal if you're able to maintain those benefits and have supplementary income to provide. It's a pretty good deal.
Well, but so if they put, let's say, the $100,000 into this disability trust, are there certain qualified expenses, obviously, that they can use that money for? It doesn't just sit there, right? It's something that they can use until they pass away. Is that correct?
Yes, exactly. So the trustee who will be using the funds for the beneficiary's benefit. So there's going to be a trustee managing the trust who's going to administer it for the benefit of your child, and only for the benefit of your child based on the instructions in your trust. What you can use funds for is quite broad in the trust. They are more limited in the ABLE accounts. But the idea is that is anything for the benefit of your child is fair game, including travel and paying for a companion to join in travel.
Ah, okay. So that is a very broad definition of expenses that would be accepted for their benefit.
Yes, it is much more flexible and broad than an ABLE account, for instance, which is limited to quotes, qualified disability expenses, which have more restrictive definitions.
Right, and this would take care of what I see as the bigger of the two problems, because if you're talking about that much money, having the cash benefit of the parent's retirement or disability or whatever it is affected wouldn't be quite as catastrophic as having to suddenly pay this huge bill back to Medicaid or Medi-Cal. And this is one way to avoid having to do that until the child were to pass themselves.
Yes.
Okay, and is there a limit as to how much you can put into this kind of disability trust?
Great question. No, there is no limit to the amount or types of assets that can go in there. Okay. So that includes, and this is huge for most families, their home is generally their largest asset. Mm-hmm. An ABLE account, for instance, can only hold cash. Mm-hmm. Disability or any type of special needs trust can hold property and any type of asset, including cash and bonds and stocks and those types of things. Okay. Well, that is huge, and that's really good to know. So one other question that I had that might be a little bit confusing to people, not that all the rest of this isn't confusing, because because it can be very confusing for people, which is why it's so wonderful to have people like you around that people can contact to try and clarify, unmuddy the waters just a little bit, and to help people, muddle through some of these issues. A lot of people get confused about, we've talked about SSI, we've talked about SSA. There's something called SSDI that some people get confused about the difference between SSI, SSA, SSDI. What exactly, where is that definition line? Can you clarify that just a little bit? Well, that is really easy to be confused on because the same acronym is used for two different things. Mm-hmm. Let me define the Social Security Disability Insurance Program first, and then we'll go back to where the confusion comes in. SSDI is Social Security Disability Insurance. Anyone who is gainfully employed for 10 years, pays to Social Security for 40 quarters, and has worked for 5 of the past 10 years is eligible for Social Security disability income. Mm-hmm. This also applies to a person with special needs. There's no differentiation here to someone with a disability or not. As long as you've worked, you have access to this. So a person with special needs can be covered by both private insurance, Medi-Cal, and private insurance through working, Medicare, and Medi-Cal, as we had talked about before. Mm-hmm. So what happens is this. The confusion comes in here. When a child is receiving their parents' Social Security benefit, they've either retired, become disabled, or passed away. The payment that's directed to the child is also called a disability payment. And that's where the confusion comes in. It's not their disability insurance that they've contributed into. It is your benefit, mom or dad's, being paid to their disabled child. But the distinction when it's paid is totally opaque. You cannot tell the difference of what that is. And unless you know all of these programs and the definition and why is this coming up this way, no one would ever figure it out.
Mm-hmm. Okay. All right. Well, so that makes sense. So it's one is.
I hope it makes sense.
One is the parent.
Trying to make sense of all the government benefits it's not easy. It gets confusing. I hope that this simplifies things. Absolutely. But there are lots of questions, and everyone has their own specific issue. This is all rather general. Everyone's specific issue is specific to them. There's no cookie cutter.
Absolutely. And having said that, if our listeners have questions about their specific case or want to know more about anything that we've discussed, how can they contact you?
They can call me anytime at 818-231-6759 or contact me on 818-231-6759. 859. Also, easy way to contact me is through my website. You can shoot me an email through there. The website is serenitas.snp.com. That's SerenitasSNP.com. That's Serenitas Special Needs Planning.
Wonderful. Well, something tells me that after listening to this podcast, you're going to be getting some emails and phone calls.
I look forward to helping to clarify these things. It's very satisfying to hear the sound of relief on the other end when we can demystify some of this.
Oh, well, thank you so much, David, for your time and the really wonderful information that you've shared with me today. I also want to thank our listeners for spending a part of their day with us. And unless there's anything else that you would like to add at this time, David?
No, I thank you for having me. It's a pleasure to be here, and I look forward to hearing from your listeners.
Absolutely. I am Gilda Evans, and I want to wish everyone out there to take care of yourself and that special person in your life.